Shidim Shari. Indeed, it was green paradise for the week. Welcome to the weekend market review, Saturday, May 18, 2024. Start out with the VIX, flashing danger, right? We are near 52-week low. Let's see, the last time it was 52-week low was, let's see what exact date, 12/14. 12/14. Okay, so the last thing you want to do is chasing green right now. All right, so keep that in mind. 12/14 is the date that we last touched this low. A little bit lower. BTC looking good, but once again, what is there to be excited about? What is there? Let's go back to the 1 year frame. 1 year. Okay, so nothing to do here. My buy order is slowly rising in my BTC, actual BTC account. I have a buy order. The last I updated was 56.7, I think was the number, something like that. But during the week it has risen, and that's fine. Would I buy IBIT, the ETF, if it dipped below 60? Yes. But for now, as far as my order, nothing to be too excited here, okay? It is a risk on trade. No matter what people like to think, it is more of a risk on than all the other narrative that people want to talk about as far as inflation, this, scarcity, that. Well, guess what? If we have falling inflation, and why is Bitcoin okay here, right? The halving, whatever nonsense people want to attach to it, it's a risk on, risk off trade for the most part. The Dow Jones, is it a surprise? It's 52-week high. Is it? Where would I short? Would I dare to throw in a bear spread at 402? Yeah, I would. I would dare to do something like that next week if we have early pump. SPY, same thing. Yes, my bear spread is dead. Money loser. It was money winner for the first, well, for most of April, I would say. I believe, uh, 9 bear spread. They all made money, but the last two I put on during April that will expire next week, most likely money loser, but they are used for a hedge. I'm not going to complain losing a few $100 and trade off for making a few $1,000 on the long side. Okay, but as far as chasing green here, no different than QQQ. Okay, everything is 52-week high, everything. Oh, speaking of everything, the last time the VIX was that high was at December 14, something like that. See, December 14. Now, does that mean that the market crashed after that? No, that means that be cautious because look, the QQQ within 2 weeks later did dip. Okay, another huge dip. Let's see what the SPY did. December 14, same thing. Okay, you have a dip, not much, just a dip. And then DIA, same thing, I'm sure. Oh, no, even no, the DIA didn't dip. So if the VIX flash 52-week low, does that mean that it's gonna crash? No. Okay, no. Cautious. Does it mean that it's not gonna crash? Also, no. We don't know, right? We don't know. All it say is be cautious. That's what I have repeated many times now. The VIX is the better buy signal than a sell signal. Okay, keep that in mind. It's a better buy signal. 20 and above, great time to buy. Down here at 12, cautious. Okay, cautious. All right, let's take a look at the list so that I stay on track to get things done quickly. First up, TLT. Um, yeah, it's got rejected where it makes sense, right? The 200 moving average, and it held the 50. Okay, so yeah, it's gonna be. It wouldn't shock me to see TLT bounce between these two MA until the next econ data. If the econ data favor TLT, then it's gonna move into the 93 range. If TLT is too strong, this might go down to the 90 range. Okay, so it's moving on econ data. Not much to say there. Okay, not much to say there. Um, since we are doing that, let's do gold. Strong move. Strong move. Um, I'm glad I bought down here at 212, 211. Yeah, 213. I bought some, not a lot, but I add to my position. I did trim gold up here, and then I bought back and added more down here, and I have not trimmed yet. I have an order in to trim at 226. So new 52-week high, there will be a trim. GDX. Um, I did not trim, but I added, I repurchased. Well, for now, let's stay here. I did not trim. I look to, on continuing strength, I might sell a cover call in a 38 range. Okay, let's go back 3 years. Okay, we are we fill the gap. We fill the gap. Okay, that's big news. That's a gap that has been there for 2 years. Yeah, 2 years. It's been 2 years since that gap. Okay, so last time was April. So that's a big bullish move that a lot of people probably miss. Okay, that's why if you go back 3 years, you see it. Would it surprise me if it paused here a little bit? It might. It might. Okay. To me, I would sell on a pullback. I would sell put 34. Okay, because I think if you look to add into GDX, that would be the spot where a pullback can happen. What I probably will do right now is put a stop into part of my position on a low of day Friday, which is 30. I still have 600 shares of GDX, so it's still a decent position. Far cry from 1,500 shares at the high of my GDX position down here. Um, but I would probably put in a stop at 36 on maybe 100 shares or 200 shares at the most. Okay, 20% of the position, and then put in a buy order down here, as well as sell puts, naked put at 34. I wouldn't mind buying them back $2 lower. Okay, get stop out at 36, buy back at 34. Easy decision there. Now FNV looking good. Not a surprise that it have a tough spot to break here. It's consolidating here. I bought on a pullback, right? That was a no-brainer. I have now repurchased everything that I trimmed to 129. Okay, everything. I bought back everything. Very happy with the re-entry in the 125 area. Let's go back 3 years to see that zone. Yeah, see that zone? It was support, support, and then it breaks support, and then there was support, and then it broke. So it's key. It's key to get out, okay, and then it can run. Um, I'm not looking to trim until I see at least 130. For now, I don't want to have an order in there, but on a spike, in fact, I'm gonna put it on alert. 131 would likely be the spot. Okay, trim, put in that alert there so that I know that it's close to my. I will put in an order to trim at 131, and then of course 136 up there. Okay, so for now, looking good. Nothing to complain about FNV. Now, as far as other minor, Newmont, that might be a good play there too. Okay, I have not traded Newmont, but look like it's breaking out. So if you want the more bang for your buck compared to just trading GDX, potentially, buy Newmont on a pullback to the 20 MA. Okay, that's one potential play right there. And of course, the other big one is Barrick Gold. Same thing. All Barrick Gold and Newmont Mining are the two biggest holding of GDX. Okay, so they control the move. The two of them are the one that drive the movement of GDX more than any other stock in the ETF. So I would say that given where GDX is and where Newmont and Gold are, if you're bearish, if you're bullish on GDX, you might want to buy Barrick and Newmont because I think they have bigger potential percentage wise. Okay, just a hunch, but for now, because I do have a decent exposure in FNV, does not mean that I will ignore the other two. Okay, since we're doing with commodities, let's just go with oil. Um, down here, easy decision to sell 72.5 put, naked put, right? Same thing. So right now, I did not do anything yesterday because oil was green. I did sell for next week back on Wednesday when it was down here. That was a no-brainer to sell puts for next week in a 72.5 and below range, right? So yeah, up here, no. If you want to buy USO outright for some exposure to oil, then down here, okay, put in an order like 74-ish, right? Yeah, but otherwise, I'm not chasing. Now, overall, this is good. What happened as far as oil in the past month is a good thing. I don't mind if oil stay in the mid 70s. It's will be much more beneficial for the economy. Imagine if oil stay around mid 70s into June. Into June, well, guess what? By July, the oil inflation is gonna be muted. Okay, muted. Okay, so year over year is gonna be muted. All right. So we're talking about oil. Um, is there anything to look at as far as CVX? No, I still have a little bit left. But this double top here, my last order was 170. It's I have to look, but I think it's like either 170 and 172, something like that. Small position. I have liquidated over 90% of my CVX holding. Would I buy it? No. I think if there is any kind of major pullback, in fact, I'm gonna put an alert right here. Okay, 160, around 160. Create an alert. below, sell puts. If it come near the 50, then I might consider doing some kind of put spread down in the 155 area, wherever the 200 moving average is. Okay, so yeah, Oxy, bigger pullback. Wow. Okay, that might be a more attractive play compared to CVX. Okay, so support right here, 62, right? Converging, 200, 100. Let's see where this leads us here. Let's see if there's any kind of trend line worth drawing. Well, I can leave it there, but worst case scenario, that could be it, right? It's kind of this right here kind of converge in with that right there, right? So worst case scenario, if you want to be safe, sell a put spread no higher than 60, because on a major oil pullback, you can see Oxy come down to 59, 60-ish range. Okay, so yeah, I would say 60 would be the highest put you should do. There. Last one for the group. Oxy, no, Oxy is outside today. XOM. Yeah, it's very similar chart compared to a CVX. I definitely like Oxy more of the three. You gotta go down here. Okay, I wouldn't touch XOM until I see way down there. Okay, and I don't need to put an alert here, because if the alert on CVX trigger, then I know XOM likely would behave the same way. Now, Schlumberger, which I like. Okay, I did sell put spread. I was not able to grab any share because I had buy order in. The order are still there. 47.25 all the way down to 46.6. Okay, is my order there. But until then, I'm on weakness. As it happened during the week, I did sell 46 put spread, or 45, I believe. So yeah, I like Schlumberger. So on energy, let's move on to LNG, which I bought a few times in below 156, and I haven't trimmed yet. Okay, I was thinking hard about trimming at 160, but for sure I have an order in up here. 163.5 is my order. Okay, it's between that ref high and the 200 moving average is where I definitely will probably exit the position altogether. Right now, I just have a trim for half of it. It's a small position, but if there's a pullback again into below 156, I add more. I might add a lot more. Okay, so it's a small position that I don't mind at all to add a lot more. I like LNG. Okay, we done. Done. Energy done. Max 7. Tesla. Eh. If I can't even man, it's just like it's not attractive enough to be short or long. Okay, would I go long down here? Yeah, absolutely. Gap fill, absolutely. Would I short or go a bear spread if I see the 190, mid 190? Yeah, for sure. The downtrend. Okay, this downtrend here, the high channel, the channel high. Yeah, I would rather do a bear spread in the 202, 200. Should it go crazy up there or go crazy down here? So either way, for me, it's in the mid. Right now, it's kind of like 50-50 where it can go. And it's just not. Apple, time to go. Crazy, 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 okay? Congratulations if you have the stomach to buy Apple down here. Yeah, that's what happened when you have the cult following and $110 billion buyback for the next decade. It's so crazy. It is so crazy for a company with weak sales, weak everything. Earning per share is higher because they have less share because they keep buying the stock back. But yeah, meh, no chasing there. Meta, kind of like in the middle of nowhere as far as what to do. To me, if I see 484, trim, right? Yeah, absolutely. That's the converging gap fill along with the 50 moving average, right? So for between 486, 487, yeah. But until then, would I buy? I would probably during this pullback. During this pullback, I did not buy. I sold. In fact, I even sold put spread that expired um, today, yesterday, down here in the 440. Okay, I was doing 440, 435. Um, I might, if there's enough juice, I might still do that using the 50 and the 100 as my protector. Okay, so, but would I buy the share outright at 454? Maybe. 455? Maybe. Okay, maybe. But for now, I'd rather do the 440, 435 put spread. Too hot. Too hot and not hot enough to trim more. Microsoft, nice move. Would I trim more? Yes. 52-week high. I have an order in at 431 and then one at 435. Okay, so the upper trend, upper channel high. Yeah. So there's a little two trim order up there for Microsoft. Would I buy 407 and below? The answer is yes. Would I buy at 400? Absolutely. Absolutely. Okay, that's where I do have order in. I bought the last time it dipped 400 and below. I think the lowest I bought was 397. So I do have order in at 400, and likely I will probably add in more order down to 389. Okay, down to this ref low that it tests 3 or 4 times. Yeah, yeah, it's Microsoft. If there's a market pullback of 3 to 5%, I think we get our chances there. Google, hot, hot. It finally, for those that remember earning, during earning after hour, it got to 176. That's where I trimmed. That's the last time I did anything with Google, was trim after hour on earning at 176. It got there. It finally got there. Okay. I do have an order to trim at 182. Crazy, way up there. Okay. It was 182 during the week because of that's where the trend line was, but now look like it's gonna move even higher, right? But I'm gonna leave the order there at 182. I probably will raise my stop. I have a stop way down here, okay, way down there, but I will raise it to. Question is where? Probably 170, right there, ish. 170, yeah. It's too much to give. Too much, too much, too much to give back. Okay. Now, not on the entire position. If I put in a stop, it probably for like maybe 25% of my holding, just to lock in some more gain there. Nvidia. Woo. Would I trim more at 975? The answer is yes. That's where my next order is. Okay. The last trim order I had was 931, and that triggered during the week, early the week on there. And then I have, that's it. I'm content on holding on to the rest of my share. But unless it's 975, I'm not trimming. Would I buy at 874? The answer is probably a little bit. I wouldn't mind buying back the share that I bought, that I sold at 931, right? $60 lower, I do that. 800-ish, absolutely. Anything on a pullback, if I see 811, I have not put in an order yet, but yeah, 813-ish, 815, something like that. The low right here, the ref low there is, let's see, 812.55. So yeah, I probably put in an order like 812, all the way down to 7 772, wherever the 100 MA is. Yeah, but can I get there? Maybe. More likely, hey, anything and everything will revisit the 100 MA, the 200 MA eventually. you know, um, yeah, don't worry about it. You get your chances. Okay, you get your chances. No need to be stupid. Microsoft, they will talk about Microsoft. Um, did I? Did I? If I didn't, I think I did. This is how bad my old memory is, but for sure, trim 435. Okay, buy down here 388, no brainer. Would I, if it is a pullback into that 406, that might be a spot you want to nibble as well. Okay, I talked about Microsoft already, I think. Oh, the old brain is so bad. 400. Okay, 400. Yeah, I think so. Now that I talk about it, I'm like, yeah, I talk about the buying order in at 400, but down to 388, you should too. It's terrible to be old and have terrible short-term memory. It's horrible. Um, Last one of the Max 7, yeah, Netflix. Not the time to buy. The time to buy was here, right? The time to not buy is here. Trim, you could, okay? Trim, you could. Um, yeah, I wouldn't touch it here. Would I touch it down here at 470, 570-ish? Yeah, but on any major pullback, 540 range, absolutely. Okay, if there's any kind of major pullback, that's where you want to buy and buy and buy. Do not be afraid. Sure, a major bear market can knock it down to the gap fill. Okay, that can happen. Most gap will be filled. Okay. All right, let's go pharma. FV into danger zone to trim. I did not trim yet. Okay, my trim order is up there, 169. I'm glad. Okay, I'm glad I bought a whole bunch down here for 2 weeks. I was able to buy share at 160 and below to average out to what I bought up here. See, I bought up here on this big dump I bought. Okay, for those that remember, on this big dump I bought, I actually have 100 share assigned because I had a put, and I thought for sure this will hold, and I was wrong there. And then I added. Okay, I like FV, so for now, 169 would be the first trim spot. Until then, I'm staying greedy. Pfizer, oops, Pfizer, holding, absorbing. The 20 MA surpassed the 50. Sometime in the next, by Wednesday morning, depending on what the stock do, by Tuesday or Wednesday, it will cross the 100. Okay, so things are getting interesting there, right? So look, the 20 crossing the 50. In 2 or 3 days, it will cross the 100. Um, where is my buy order? 28 all the way down to 27. But we'll see. I said there is no, can Pfizer fall out of this zone right here? Yeah, absolutely. If there is a major market pullback, anything can happen. Okay, so just because it's doing well this past week does not mean that it can't fall out of this support. Well, right now it's neither support or small resistance until it break. Look, it tested twice and didn't get there. Okay, and I'm not surprised. For those that follow me about Pfizer long enough, I predict that this will be a very tough area to break. I would not be surprised if we stay in this area. We might even go above it and then come back and just bounce around and dance for, I would say, potentially 3 weeks. Why? This right here. Okay. I do believe, unless there is a major market pullback, within 3 weeks, this 200 moving average will come down to the 29 range. And that is something that this thing has not seen in a long time. Okay. Pfizer has not. The last time Pfizer saw the 200 was right here. Yeah, you see this right there. It was December, the end of January, early January of 2023. Yeah, year and a half roughly. It's been a nasty downtrend since then, and a break above that would signal big time bull move. Okay, so I think for the next 2 to 3 weeks easily. Okay, at least 2 weeks, could be even 4 weeks, depending on what's going on with the market overall. But 2 to 3 weeks, there is chance to buy Pfizer here below 29, and I will. I might even double up on my Pfizer position if I see 28 and below. Okay, so yeah, I like Pfizer long term. I think in the next 3 weeks, when we can break the 200, it could be the bull move that can be sustainable. Sustainable is a key word. Amgen is dancing. Okay, dancing. Um, Nothing to do there. Okay, nothing to do there. I wouldn't touch it here. I wouldn't chase it here. I wait. JSK. Wow, it was a crazy move. Look at this thing. It was gapping, gapping, gapping. It was just, yeah, it was insane. Okay, but let's go back 3 years. Where did it stop out? Yeah, not a surprise, right? Multi-year high here. Multi. So yeah, it's. I was bullish, but I no longer bullish on JSK. I think the the path of least resistance for JSK is most likely downward. Okay, most likely downward. Can it go higher? Maybe to 47. Okay, maybe. Multi-year high is 48.25. Not even 10%, less than 10% away. So yeah, it has been a very strong move. Okay, what we saw there from 34, yeah, you're talking about 30% move plus. Okay, in the last 6 months. So yeah, it'd be nice, but I'll be very careful on holding it. If you have it, definitely raise your stop to above 43 somewhere. Okay. Um, let's go back to the yearly chart. There is not a heck of a lot more attractive big pharma play. Oh, of course, VRT. What I'm talking about, VRTX, Vertex. Wow, breathtaking move. Okay, wow. Talking about breaking the channel. We're going from a downward channel into the high end of the channel. I trim. Okay, I trim. Um, would I raise my stop? this is a tough one, okay? Because the moving average is so far below. It's too much room here. So for now, my stop, I probably will raise it on Monday. It's gonna be like 432 ish. Okay, I'm gonna use the low of day on Thursday, which is 428.62. Okay, so 428.62. Oh, that's Wednesday. Thursday low is 432.22. So yeah, I'm gonna go with 432.22. This thing can move very fast. So if I get stopped out on partial, not the whole position, I'll probably put in an order to buy 417. Okay, buy back at 417, stop out at 432 ish. But yeah, it's in the area where you should trim a little bit. Okay, you can't be too greedy. I have another trim order in at 450. So in case there is some kind of big move, yeah. Now, if there's a big move into 450 and I trim, I will raise my stop to 440.35. Okay, because I think once it pop up there and come back and retest the channel, it might test it even lower. Okay, so we'll see. We'll see. Other than that, let's see. J&J, trim time, yeah. BIIB, trim time, yes. Channel high, right? It tried to make a run, tried, and it can't. And now it's hanging on for the 100 MA. I think the path of least resistance for Biogen is lower. Okay, if you want to buy down here, yeah. Otherwise, no bueno. Let's end the pharma on. I'm skipping all the small biotech. Let's go with the big XBI. I trim. Well, I didn't trim. I get out. I got out altogether during the week. Okay, sold out, gone. Would I buy back at 87, 88 ish? Maybe, for sure, for sure. I would buy back at the 200. Okay. The last time it came down and test for a week, nice move from 83 to 93. That's a nice move. Okay, 13% plus kind of move. So yeah, down here, 83, buy big and get out. Okay. Banks, wowza, wowza. I trim Goldman Sachs again. I had my position getting smaller and smaller, and I'm raising my stop. Now my stop is 454. Yeah, up there. This is rare air here. Rare air. Let's go back 3 years. See, rare air. Let's go back 10 years. Yeah, rare air. Okay, it's wow. Raise your stop. That's all I gotta say. Raise your stop. Bank of America. Sure, it's not 52-week high. Well, it's not multi-year high, but still, I am also a very small position. Okay, no, it's getting dicey. It's getting dicey, people. Okay, if you want to draw a trend line, okay, it's there. See, here, 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 dicey, dicey. Okay, so yeah, I think on Monday on a pop, I'll probably put in an order to trim at 40. Even though I have a small position, I think I would trim even a little at 40. Sure, if I get above, let's see how high. 42, yeah, that could be the top range. On the other, where's this purple line? Where is that purple line lining up? Okay, that purple line, it's kind of a weak thing here. In fact, I wouldn't even call that anything, to be careful. I'm not remove it. Remove this thing. Yeah. But for now, I think 42.6-ish might be the potential next big leg up if there is another leg up, but for now I would trim for sure at 40. I'm out of Morgan Stanley. Out. I had an order in to trim at 100 and it's gone. No more, nothing, nada. Okay. The last time, this range 100 is a big consolidation range. Big reversal here. Yeah, I'm content. I'm happy with the position. I'm happy with exiting. It was definitely a gift. It was a gift on this fine on, banking with bad people. Really? Banks doing business with bad people? Is that news? Who sold and miss out on a 20% run? Yeah. Who want to put on the dunce cap? Speaking of that, TD brought to us from Kingsley, Canadian viewer. It got hammered on similar, bad banking with criminals. That was a gift. Oh my God, that was a gift. I missed it. Kingsley brought it to my attention, but for me, buy the dip. Okay, buy the dip. TD Toronto Dominion, not TD Ameritrade. Toronto Dominion. So in the put in order at 56. Okay, to me 56 down to 55. Buy. Even 52-week low. Yeah, I like. Okay, compared to all the other banks, I'm liking. This is a bargain down here. Okay, so very few bargains in banking right now, and this is one of them. All right, we're done with banks. Let's take a look real quick at all the credit card company. No, trim. AXP, trim. Visa, trim. American Express, no, MasterCard, and trim. Okay, trim. This is not a buy time. COF, Capital One, trim. Right? Discover, trim. Well, the buyout between Discover and Capital One, hopefully you don't own both. It makes no sense to own both. If you own one, good enough. Own the one that is getting buyout, okay? Don't own both. Own one. If you're gonna own one, own the one that is getting bought out instead of owning the one that's buying the other company. All right, we're done with banks. We're done with energy. Last, before I go, would be a bunch of med device. Abbott. Back at buy zone. Okay, if you want to buy Abbott here or sell put 100 below, yeah, that would be the only way I would play Abbott. Okay, is way down there because okay, it's way too risky, especially on this head, shoulder, right? To complete this pattern, it will come down to the 98 range. So yeah, I'm not keen on taking a big risk, and this is just weak. Okay, this is not. I'm not a fan. I'm a bigger fan of EW. Nice bounce off the 100 MA, consolidating here, right? And this is another potential head and shoulder pattern here. Okay, shoulder, head, shoulder, right? So we'll see. I'm not as bearish, but at the same time, I have a small position that I exit completely up here. I re-enter down here. I might raise my stop to 88, 88.58. I might do it. I should. It was down here. My stop was, for now, it was a 20. On this big move here, I didn't trim. I raised my stop. I thought about trimming. Trust me, I did. But if there's a revisit, I might trim. Okay, because that would be 3 times in a row that it have a hard time getting beyond the 50. Okay, so watch out. It's on a tight watch. Medtronic earning is coming up. Medtronic, trim. Okay, I am trimming. I trim a little bit the few time up here, and then I didn't trim more. Okay, and I kicked myself for enduring this pain. But you betcha, I'm trimming it. Okay, there's a big order to trim at 87.5. Okay, and I'd be more than happy to revise that order lower, depending on what's going on. But yeah, on earnings coming up, people, be very careful. Okay, this can be a nasty rug pull down. So if you have Medtronic, be ready to exit or trim 87 and above. Okay, between 87 and 90, oh my God, I would be 100% out. That's it for this week. Thank you for watching. Have a good weekend.